I wanted to start by asking you, Jeremy, just to, this whole discussion, I mean, blockchain is a technology that you're using. When you look at the different options that are out there, what are you betting on in terms of who's going to win, who's going to lose? Are we anywhere near having clarity about that? Is it Ether? Is it Bitcoin? Is it something completely different?
Right. Yeah. So I think our philosophy as a company has been that we think it's now possible for both technical and economic reasons to make money work the way that the internet works, which is instant, global, free, secure, hopefully fun. And to create a model for consumers in particular where they can exchange value, share value between each other and ultimately with businesses, the same way that we can browse a website or send an email or a text message or do all these things over these distributed networks without any fees, without any costs. And that the problem of synchronizing distributed databases, which is what actually money and payments actually is now something that's being commoditized, and we can do that really efficiently, and we can do that super cheap. And so it's now possible to make it so that if I want to send you some dollars and you want to receive some dollars, that should be the same as sending you a text message, you receiving a text message, whether it's across the table, across the pond, across the planet. And so there's a lot of things we can do within our own technology and operations to make that really, really inexpensive to do and provide it to consumers effectively for free. But what we don't want to do is replicate what's happened in the existing world, in particular in the digital world, where people are building walled gardens or closed systems. So I can pay someone on PayPal if they have PayPal. I can pay someone on Venmo if they have Venmo. I can pay someone on WeChat if they have WeChat, or Alipay if they have Alipay. But what we don't have is we don't have a set of protocols that allows digital wallets all around the world to instantly exchange value with each other the same way that email services, web browsers, SMS, and others work. So that's what we're interested in. We're interested in a world where value exchange for consumers can happen the same way that the rest of the internet works. And so blockchain technology is a big part of what got us excited about making this happen, because we saw that we could do this in a way that would be an open model for value exchange. And so initially, as a company, we built on public blockchain technology. So right now, if you want to send dollars, pounds, or euro between people in the US and Europe, you can do that instantly for free. But if you want to send value or receive value from China or India or the Philippines or Mexico or Brazil, et cetera, then we do that through the blockchain. We essentially take dollars or euro or pounds and convert it, in this case, to Bitcoin, invisible to the consumer. We settle the transaction over a public network, which is secure and where we don't have counterparty risk because of the nature of the way that technology works. And the end user on the other end receives, Indian rupee or Brazilian real or Japanese yen or whatever it is the service provider on the other end works. And so we're building a model that works globally, and we're using public blockchains to do that. Now, in terms of the question of what's the win or loser, our view has been that we're still in the really early stages of the technology and its development. That it's highly unlikely that any of us will be using Bitcoin in 5 or 10 years, in the same way that how many of us use NCSA Mosaic or Netscape Navigator? Is there anyone? No. Right, so we're in the really early stages, and the early stages of the web, you had competing companies who were trying to evolve the standards, and then an actual organization got built, the World Wide Web Consortium, and it created standards for how the web's architecture worked. And a lot of industry and academics and computer scientists contributed to that, and now we have the web. And it's a global platform, and it changed the world. And so we need that equivalent model for value exchange, and that doesn't exist yet. You've got a highly insular group of core developers focused on Bitcoin. You have a benevolent dictator focused on Ethereum. You've got Consortium.
Explain that joke to everyone, because
well, the model in open technology is, so Linux is probably the best example. Linus Torvalds created Linux. Linux is the dominant form of operating system in the world today, and he decided what went in it and what didn't go in it. He was the benevolent dictator over the decisions that went into the standards of that operating system. And Ethereum, Vitalik Buterin, is essentially the benevolent dictator in that case. And so that doesn't feel like a good open global protocol process standards body for value exchange. And so that's still eluding us, I think. And so I don't know what it'll be called and when it'll emerge, but it's certainly not here today.
Todd, same question to you. I mean, explain how R3 fits into that.
Sure. So we get that question a lot. Is there going to be a winner? And can we hurry up and figure out who the winner is so we can all skip to the end? We don't feel that we're ready, I think, as Jeremy said, to anoint a winner, and we don't think that that's actually the best way to go about it. If you look at the history of blockchain, so each popular public blockchain was created for different reasons. So Bitcoin was created to be unstoppable digital cash. Ethereum was created to be an unstoppable world computer, unless Vitalik said to stop it and roll it back. Both of those ends are amazing, and there's really interesting things you can do with that. But if you look at global regulated financial institutions, those don't fit the needs for what the problems that they have. They have a different set of problems. One thing that there's a big overlap, I think Jeremy used the term walled garden. I think it's very interesting because there are walled gardens from the consumer side, but if you look institutionally, if you really dig under the surface, there's an incredible amount of walled gardens amongst financial participants. So one of the interesting or maybe ironic things is that Bitcoin was created to obviate the need for banks and value exchange. But what it has taught banks is that potentially they can harness some of that technology to reduce the dependency and need for trusted third parties between banks. There's a lot of friction in the market that has existed for various reasons. Some make sense, some don't. So what we are focused on is trying to solve for the requirements of large financial institutions. So we're very focused on trying to break down these walled gardens, but in a different sense than what Circle is doing. So that means taking distributed ledger technology, a little bit different than Bitcoin and the blockchain as it's known popularly, and standing up a network of financial institutions and deploying a platform on top of that.
Now, I mean, I guess some people would say, you know, the dream of blockchain, as popularly expressed by, you know, it's sort of true believers, is that it will wipe out the need for all intermediary institutions, essentially, and you know that what you're doing is effectively part of an oligopoly that is trying to use the technology to reduce some of its costs whilst retaining its place in a system that no longer is needed.
So if you think about Bitcoin, the promise of Bitcoin is everyone could be their own bank. What people have realized is that being your own bank stinks. It's really hard to do. So it's also taught that you can minimize trust in a system, but you can't eliminate it. So I think Jeremy alluded to core developers. Trust never goes away. It just is hidden in places you're not really looking. So from what we're working on, and one of the things talking about openness, you know, are the banks altruistic in trying to be open? Maybe not, but what is the strategic long-term goals for large financial institutions? Are they really hell-bent on fighting the drumbeat of history as we move towards more of an open source world? You know, that's not what they tell us, and that's not part of our strategy. It's about actually embracing what has to change and embracing more of an open system where it makes sense, but doing that in a way which also makes sense for the realities of money and regulation. So one thing about this technology that has happened is that it has started to, I wouldn't say push, but it started to nudge the regulatory community in some interesting ways. So we're trying to help push that along and make it be more open.
We'll come back and talk about that in a minute. But Mike, as an investor, I mean, how does this battle of the blockchains look to you? Where are you putting your money? Where are you regretting putting your money? Where are you
so these guys are actually building companies to make the world a better place, and I'm a speculator and just trying to make money in some ways. I'll tell you a story. In 1997, I had a college roommate's best friend who was apparently a brilliant guy who spoke perfect Chinese as a white guy, who pitched me this great idea over a bunch of Jack Daniels to invest in the Chinese internet. And it was such a compelling story that I gave him about a third of my net worth to invest in the Chinese internet. And if you took a dartboard and threw a dart at any of the 100 possibilities to invest in the Chinese internet, that $600,000 could have gone from worth 500 million to 50 million to 25 million, but it was almost impossible to have invested in the Chinese internet in 1997 and not gotten really, really wealthy. And I lost all my money. And so the moral of the story when it comes to this blockchain Bitcoin universe is that we're literally in the first or second inning. And when you sit with the Ethereum guys, it's everything. And you're like, it's going to crush the blockchain, the Bitcoin blockchain. And when you sit with the Bitcoin blockchain guys, they've got very compelling arguments. And so I've taken an approach of I own Ethers, I own Bitcoins, I've invested in mining companies on both sides, exchanges, enterprise companies. And so really spreading my bets across the universe of this spectrum. In the last 18 months, I've gone from thinking this is a possibility to a high probability, like the blockchain isn't going away. It's funny, I'll tell you a story. I have a college roommate who had gone off the grid. No one knew where he was for 4 years, and all of a sudden he popped back up when he read that I had invested in Bitcoin. And he emailed me, and he was down in Barbados coding. He was the only guy smart enough to do computer science when we were at school. And I left Fortress, my company, last November, and so I looked at my balance sheet, and I had all these Bitcoin investments that I wasn't paying enough attention to, so I called him, I said, let me come over and visit you and get a primer on what's going on in Ethereum and Bitcoin. And I literally expected to show up and find him and a dog and maybe an analyst. And I showed up in Bushwick, Brooklyn, and there he was with 45 stunningly impressive people working for him. And I was like, you're their boss? And sure enough, he runs a company called Consensus, which is a company that develops applications in and around the Ethereum space. And it's a decentralized company, which I learned. And so everybody owns a piece of everybody in some bizarre way. But it took about 2 hours to be there, and I was like, I want to buy a third of this company. I was like, sell me a third of your company. And he was kind of excited because I had some reputation in the Bitcoin space, and he needed some capital. And I was trying to figure out even what I was going to try to buy. And it was really difficult. I mean, I'm not kidding around this. We want to put a corporate structure on the thing, and he hadn't really figured it all out yet. So theoretically, he was excited to sell me the thing. And I ended up compromising. I bought a bunch of the Ethers, which was the next best bet, because I was leaving to India 2 days later. And so I bought a bunch of Ethers and went away and came back later. And the Ethers had gone from 90 cents to $6 and then to $20. And so his company was no longer available for sale. And so my second great mistake is when you know something's right. I should have sat there for 2 weeks and hammered out a deal with the guy, because now it's a 110 people company. It was 45 at that point, and I tell you, it's on track. I would be shocked if it's not 500 people in 2 years.
So this recent sort of very high-profile problem with Ether, where the DAO fund was created and it was then hacked and raised all that money. It was hacked. The money seemed to be stolen. They basically went back and launched new Ether, essentially.
Yeah.
I mean, you think Ethereum's going to survive that? Ether's going to survive?
I do. I think what's interesting is they took a pretty cautious or maybe adult-like approach. I actually was part of a couple conference calls, and the thought was, we're new enough of experiment. We believe in this. We're going to make some mistakes along the way, and rather go back and fix it and not have this constant war of hacking on this $50 million, which was then tied up in the atmosphere, because the money was almost stolen, but not really stolen, and so the thieves never actually got the money, and so it certainly was a setback. In the same way, I think when the Japanese company went under in Bitcoin was a setback. But it just seems there is a march. When I look at their client list and when I look at the crowdsourced funding that they're being able to do. I'll tell you another story. I invested in their enterprise business, partly because I'd made a lot of money on the Ethers and I felt somewhat compelled to participate. And they did what would be an old school venture capital fundraise, where they went around to potential investors, VCs, and I might have the numbers wrong, but I think they raised roughly $3 million at an $18 million valuation for their enterprise business. That happened about 6 weeks ago, maybe 2 months ago. A month later, they decided they had another business, which was their prediction business. So there's, like a gambling business where me and you could make a bet, and they raised, called Augur. And within 15 minutes, they were able to crowdsource a $10 million fundraise. And so the excitement around this space is shocking. Now, is that a bubble? There might be these little mini bubbles in the crowdsourcing space. But we're just starting in this whole thing. And so, to me, I don't see, as an investor, how you're going to go wrong in this space over a multi-year period.
And is it the blockchain that's exciting, or is it the currencies? Like, I mean, you're investing in Zcash, this new form of non-traceable digital cash that's going to be launched later.
I think it's going to be. Zcash is going to come off like a crazy bubble because there's so much excitement around it. One of these businesses I got into was mining both Bitcoin and Ethereum, which is a strange business, especially for a non-technical guy to be in. And you can tell that the Zcash thing is exciting because people are calling us up and trying to buy our mines that we used to mine Ethereum with for 1.5 times what we paid for them almost a year ago, because they need those mines to mine Zcash.
And a mine is just a computer, is it?
A mine is a bunch of computers that link together that do these calculations. And so I think Zcash is going to be this frenzy, and we'll see if it stays. And so yeah, if you can buy it early, it's going to be a.
But for you, the currency is more exciting than the.
It's not. It's not. I actually have thought about this and talked to people and can't figure out 5 years from now if we see blockchains everywhere, does that mean the currency has to be exponentially higher, or is it going to reach some equilibrium? I just am not smart enough to know, so I'm kind of betting on both sides.
And Jeremy, what's your reflections on Ether and the recent problems? Do you share Mike's optimism about that sticking around?
Sure. I mean, I think this concept of public blockchains is a pretty important one. I think when looked at narrowly through the lens of say the original idea behind Bitcoin, which is anonymous digital cash, it feels narrow. But when you look at the utility of these, as the Economist said, trust machines, the applications are really broad. They're very, very horizontal. So wouldn't it be great if we had cryptographically provable and auditable and immutable voting machines that were not susceptible to, say, hacking from a foreign power? Would that be useful? Yes. Could blockchain technology help with us to do that? Yes. Any form of record keeping, any form of certification, any form of verifiable transaction, and that can be medical record transmission, it can be voting, it can be property and estate title, it can be the movement of value, i.e. currency value. All these things can be built on these public blockchains. The more public it is, and the more distributed that is, the more secure and open it is. And I think we've learned that from the internet. That's what's made the internet thrive, is open public networks. And
what's giving Ether the edge over Bitcoin?
Well, I don't know that there's an edge per se. All this stuff is very experimental right now. The actual use cases in the real world beyond speculation are extremely scarce, very, very scarce. And so I don't know that there's an edge per se. Ethereum has a broader design center. It's focused on being a more general purpose record keeping and compute engine. And so I think it has just a broader mandate. That makes it a harder technical accomplishment. It makes it harder to scale and secure. And so it's way too early to know if that experiment is going to be able to scale and maintain its security. But I think it's pretty important innovation. There's very likely not just one public blockchain. This is not a zero-sum game. We have dozens of different protocols we use every day for managing how we communicate over the internet. You don't realize when you do a video call in a web browser that it's WebRTC. You have no idea what WebRTC is. And then maybe when you're doing a Skype call, you're using a particular variant of voice over IP. And when you browse a website and you have a chat through a browser, you're using HTTP. You don't really care what those are, but there's lots of variants for how we communicate, for example, over public networks. There are going to be a lot of variant public protocols that are used for these types of applications. And again, it's not a zero-sum game. It's not this one wins, that one wins. And I think we'll probably have several significant public blockchains that.
And do you think, I mean, all these public blockchains will have this rather weird arrangement to the outsider of needing to have a currency associated with them that's being earned by burning out vast amounts of computer processing and electricity?
It's possible to have a public blockchain that is an open suite of protocols that doesn't have a native digital asset that's part of it. So you can imagine that there'll be public blockchains that are record-keeping systems and that are secured in a distributed consensus-based manner, but which don't have a native digital asset that's traded to secure the network. So I don't know that they have to operate that way to ultimately work.
Oh, it's all very young. So you think about what has been created, the wealth that has been created within the Ethereum ecosystem in a short period of time is staggering. The same thing happened with Bitcoin. And so the first order effects are being felt now. And some of the second order effects are starting. But what happens over time is that we don't really know how it's going to play out when the protocol itself is monetized. So you have the initial coin offerings, or you're monetizing the protocol level, and that drives incentives. So everything goes back to those incentives. So you look back to Bitcoin, and Bitcoin has had a series of governance crises over the last couple of years, mainly because of the incentives within that system and who owns what and whose interests are aligned with different ways of governing it. The same thing is going to end up happening within Ethereum and other chains. And I think it seems that the Ethereum community has a better chance of figuring all that out because they seem more functional than.
It's interesting because I mean, I think the attraction, when you hear people talk about the blockchain, is that somehow it's automating, decentralized trust and so forth, and it's taking out the human factor, but yet they do have these governance systems where humans are at the heart of whether it can scale up fast enough and so forth.
It's very difficult to implement a system that eliminates a political system in the background.
That's right. I mean, I think this is the ultimate lesson on all this stuff, which is, you can shift governance around. You can shift trust, as it were, to coders. You can shift it to miners, which are basically people who are securing the network, processing the transactions of the network with voting power. You can shift it to a trusted consortia of people or semi-trusted consortia of people. There's lots of ways to locate trust. I think theoretically, the more public and open it is, the more trustworthy it becomes and the more secure it becomes. In many ways, that's the lesson of the internet. But that it's not a zero-sum game. It's not that there's one or another. We're going to have hybrid worlds here. We're going to have lots of private applications of distributed ledger technology, and we're going to have those interoperate with public networks. You're going to have government-issued, digital, securities and digital currencies that interoperate with public networks. It's not a zero-sum game.
And how do you two feel about Zcash? Is that going to be a beer?
I think it's way cool.
Yeah.
I don't know. Zico's
it
a really
cool?
smart guy. It's a really interesting approach. It's going to be very interesting to see how it plays out. It has, used in the right way, it has amazing properties. It can enhance fungibility, but it can also be an incredible money laundering machine.
Because it's intriguing. I mean,
depends on how it's used.
Just
like
as
the internet's used for porn.
just as the Bitcoin community seems to have finally reassured all the regulators that this isn't just a criminal activity facilitator, that there's actually, there is some degree of traceability in there and so forth. It seems like along comes this new currency that's designed to reintroduce all those fears.
There's a core. I mean, one of the reasons I invested originally in Bitcoin, I got a call from a friend in California. He said, you got to look at this thing. And I never heard of it. And I looked and I was like, okay, there's a libertarian, anarchist, anti-government universe out there that is some percentage of the population that this is going to appeal to. And there is certainly a core of the community that fits in that bucket. And this is, I think, will get the regulators nervous and isn't a great thing per se, for the overall experiment, because it's just going to get people to step back, because you're going to think, well, Jesus, here's a completely untraceable currency, at least for now.
I'm pretty negative on it, to be honest. To me, I understand the desire for privacy, anonymity, fungibility, et cetera, but I don't think it's going to be something that is going to be adoptable by a mainstream economy. So it's useful if you're a gambler, a tax evader, you're all these things. But if you actually want to do something that increases utility value for consumers, businesses, is focused on sort of increasing the productivity and efficiency of how the economic system works, that's a different design center than how to basically avoid taxes and government oversight. So they're just really different design centers. You can build something that's focused on the public good and a broader set of things. You can focus something on that's much more narrowly focused on ideological concerns. And I don't know that that's very helpful right now.
Todd, one of obviously the overarching theme of the day's conference is collaborate or die, and there's this. You are working with this consortium of financial firms. What are you learning? Is there a consensus as to what they're trying to do with the blockchain that's driving your work, or is there still a lot of disagreement? How are you able to get effective collaboration with those companies?
Right. So collaborate or die. So the collaboration, it was how we started and how we came together, and it's still. I would say, looking back, when I remember the moment when Dave Rutter, who's our co-founder and CEO, came to me and he said, "I have an idea. We'll take the idea that we've been working on and we'll go and work with a group of banks and collaborate with them." And I said, "Dave, that's the worst idea I've ever heard in my life. Banks don't collaborate." But one thing that we realized very quickly is that the situation for banks is such that collaboration is collaborate or die now. There has to be a step change in how those businesses are operated. So I've been extremely and pleasantly surprised with the amount of collaboration that we've had across all of the firms that we work with. So as far as if we've coalesced around what this is good for, I think it was definitely a backwards process, is that everyone fell in love with the technology and the promise before actually, okay, what is the problem that we actually want to solve with all of this? And it's taken a while.
One yet?
It's taken a while. So we have. So there, if you look at there's a few that folks started on, and I think there are problems to solve, but they might not happen right away. And the big prizes around settlement or instant settlement, I think that will come in time. But there's such a regulatory burden, and there's such a buy-in that has to happen from central banks and regulators in order to get that to happen. That we are working on it, and folks are working on it. It's going to take a lot of doing. It's a big prize. There is, for us, we break it down into a couple different areas. One, we're very focused on opportunities for financial institutions that they're not playing in right now. So this is the white space opportunity. So if you look at trade and trade finance, if you think that security settlement is stuck in the 19th century, trade is stuck in the 17th century. So there's a lot of opportunity there for rationalizing how goods are traded and how things are financed from an open account, for example. That's one area. Two is this is not just for blockchains, but there is a theme around data aggregation or the unbundling of data and who has the power within that. So you look at the amount of data that's created within the financial system. Usually what happens is that gets aggregated back and sold back to the institutions that created that data set. So one of the potentials for distributed ledger technology is to flip that around and empower the edges of that network instead and allow for all the participants to actually get paid for the data they're creating. So that's another one. And then there's a lot of issues and challenges. If you talk about how banks, the challenges that they have, you look at the regulatory space. So costs are going up, mainly because regulatory imperatives are going up. So there are a lot of applications that either include regulators or don't even have to include them that can help ease the burden of regulatory compliance.
And I mean, how does something like what you're doing, which is essentially a business, compare with something like the Hyperledger project, which is more of a sort of a non-profit, let's all get the industry together to cooperate? I mean, is it better to be doing it in a business form, or?
So I think there are two different models. So the Hyperledger project is run by the Linux Foundation, so it's a non-for-profit group. We're actually a member. I sit on the board. And that is run by a gentleman, Brian Bellendorf, who has lived and breathed open source projects in the past, and that is very much a community/foundation approach, which we're happy to.
I mean, is that more likely to succeed in a way than something like is that more likely to be successful?
I don't know. I guess I'm trying to struggle with the question. There's not a zero sum. We work with them, and they will enable our success, I guess, is a better way to put it. So we are very much a consortium of financial institutions. And the Hyperledger project is a non-for-profit that helps try and identify some commonality and common standards across different blockchain approaches, I guess the best way to put it.
Did you want to come in on this, Mike?
Well, when I think about the big picture, the kind of killer app for blockchain and the real disruptive technology is identity, is being able, I mean, there are 2 billion people on the planet that don't even have an ID card, and being able to get a computer identity with everything you have in your life downloaded, where you control who sees what. And so right now, Amazon and Facebook and Google, they kind of own everything you do and all the data and all the stuff. They know who you are, and they take that data and they sell it, and it's a very valuable commodity. And quite frankly, it's yours. And so I think the real disruption is when you can get to an identity with a reputation score, and people can know you're Matthew Bishop because you're Matthew Bishop, and you've got friends in the community that can vouch that you're Matthew Bishop, and you've got people that you've interacted with on various networks. That changes the game in a lot of ways, because then you're controlling your privacy. It's shocking in this world, I mean, between the hackers that we're seeing in the election and just how little privacy we're all starting to feel. And so I think blockchain has the capacity to bring us back some semblance of privacy. I think it's a ways away, but I'm trying to figure out how to invest in it, because I think that really is the killer app.
There was a ton of excitement when we first started around identity as a use case, and it scared me a little bit because it's a huge challenge. Self-sovereign identity is probably where we get to, but if you think about being your own bank is hard, try managing your own personal data store. It's
interesting. We've just seen a question pop up on the app, which is, can any of the rise of blockchains be attributed to growing public distrust of central systems, institutions, governments, etc.? And I guess you're both saying yes in a way.
I mean, it's very clear that the Satoshi's white paper was a reaction to the global financial crisis. So that's a pretty clear answer for that. And I think there is a, I guess, maybe not growing distrust like in the Trump sense, but there is definitely an unease. And
can the blockchain save us from Trump? That's the question.
I think he's saving us from himself currently.
When you meet, if you sit with Vitalik or Joe Lubin at Consensus, they're true believers in this as a revolutionary technology. I mean, less in for the money, quite frankly, when you sit with them, and more in for this transformation. And so we'll see. I mean, I do think that the DNA of a lot of the coders is a transformational one.
I mean, I want to get back to the collaborate or die theme. I mean, you're working with Barclays now. I mean, what's your philosophy as to why you're collaborating, and is it essential to your success?
Sure. Yeah. So we're a regulated financial institution in the U.S. and Europe, and we're allowed to conduct a whole bunch of different business activity with money, but we're not allowed to directly hold in our database central bank money. So we have to synchronize our database with other people's databases that are able to hold central bank money. And in order to do that, we also need to access the protocols that settle transactions with central banks. So we have to have banking partners to offer the product, our consumer product. So it's critical in every market that we have one or more banking partners that allows us to perform those activities. So for us, it's critical. Because we're not a bank, we have to have those partnerships.
You don't want to become a bank?
It's not clear what our charter will be in the future. I think we want to offer consumers a broad range of financial products, and we'll, focus on whatever legal and regulatory licenses we need to offer those products. Right now, we have a consumer payment platform that's, I think, a great consumer product and experience. It's growing fast, but we don't have to be a bank to perform that today. So we need banking partners. I think ultimately, though, we want to work closely and directly with central banks as they look to implement this technology. And I think we've seen this in our discussions with the PBOC and the Bank of England. They look at a future where the financial institutions that are defining the future of payments and money are as likely to be technology companies as they are to be traditional financial institutions. And you see this in China. China has a heavily regulated financial sector, and they finally started to grant private banking licenses. Until that, you either be a state-owned enterprise or a joint stock state-controlled bank. And the first 2 private banking licenses went to Alibaba and Tencent. So that would be like the OCC, and I know Thomas Curry's here, granting a charter to Amazon, Apple, and Google for a bank license. That hasn't happened, as far as I know. But the point is that technology companies who are focused on building software, because at the end of the day, money is data, and all the user experience of money and the applications of money are just software problems, fundamentally, that technology companies are going to be in a major role working with governments to define the future of how this stuff works. And just like technology companies have defined how communications works, it's not AT&T and Verizon that are defining the future of communications. It's WhatsApp and Facebook and Google and lots of others. So I think there is a shift that will happen where tech and internet and software consumes more and more of what is today thought of as the financial services sector.
Hi, Tom Glosser, investor in fintech, a bunch of blockchain things. I'm curious whether you think, and maybe first Jeremy, whether there's a clash between tech culture and banking culture in the following way. Tech culture famously celebrates, break things fast, iterate, pivot. And we live in a banking, at least a regulated banking world, where it's a compliance culture, 0 mistakes, you're out. How do you reconcile the two, and do you think the sort of compliance culture will seep in and sap the innovation in the tech culture?
Well, actually, let's take 2 more questions. I know this is a great question. I think let's take a couple more, though, right next to Tom, right at the front as well. Let's do that, and then...
Oh, hey there, Joe Quistella from Deloitte. Just a quick question, and Jeremy, you mentioned something about not having a native digital asset. And one thing I've always been thinking about is, for an open public network without a native digital asset, where does the economic incentive come to for the mining and the transaction confirmation and stuff like that? If anyone had any comments on that as part of the response, I'd love it.
Okay, and we got one more question. Just a bit further back. There's...
Hello, my name is Alex Dragton. My question is, so it sounds like banks right now, they agree that the distributed ledger is positive and has, really great technology for what they're doing. But what is it going to take for the first bank to actually take that step and adopt the technology? And then is there a reward or an incentive to be that first mover?
Great. Well, why don't we take each of you take one of those, and let's try and keep the answers quite quick so we can go and have another round of questions before our time is up.
The first one, which Tom had. I think it does have an impact. So the regulatory and compliance burdens has an impact on anyone who's operating in a regulated industry. I think, and we experienced that. And so when I describe the operating expense lines of Circle and on the labor side, 50% of it is people in product R&D engineering. So it's a heavily technology-driven company. About 25% are legal, compliance, and risk. So we're a software company with a significant investment in legal compliance and risk. However, I think one of the things that sits behind at least our optimism about this kind of ability to innovate in the consumer space in finance is that compliance problems, the way to solve them isn't with people, it's actually with machines. It's with AI, and it's with applied machine learning and AI. It's using software to solve these problems. We use Thomson Reuters software as an example, as part of our background checking on people and all that good stuff. But software is how this gets solved. And so you have to look at the operating expense lines of financial institutions. How much of it is solving problems with software and machines, and how much of it is throwing humans at the problem? there's still obviously more barriers to getting product launch and the agility as you speak to. So we release multiple new updates to our service and software every day. We're continuously releasing. Regulations don't stipulate that we have to approve those releases. But if we're going to launch in a new market, or we're going to expand the risk profile of what we do, yeah, we absolutely have to work with government. And so to launch the products that we thought would be helpful or exciting for consumers, it took us 2.5 years to get the approvals that we needed to do that. So yes, it is not the fast and furious, agile consumer software space that you see in, say, social media. And so there are different barriers, not just to entry, but to operations. But at the same time, I think if you look at the operating economics of large banks and you compare those to what we'll see in the next 5 to 10 years with internet financial technology companies, they're going to be very different and much more software-based.
I think the last question was around.
Yeah, I was going to take that.
Oh, were you? You're gonna give me the other one. So, very quick answer would be we don't feel that a bank is going to be a first mover because this is a network. The value is within the network, and that's been proven over and over again. So you have to have a network effect in order to put something into motion. Now that makes the coordination of that harder. That's why we've been focused in the business model that we have. I will say that this isn't something where you turn off the old system on a Friday and you come in on a Monday and everything's on the blockchain. So it's going to take a little bit of time, but very focused on finding the initial case where you can go live with a network of banks in a way that is the switching costs aren't too high and you can run in parallel for a period of time until you sunset the old system.
Yeah, it wouldn't surprise me at all if that in the finance world is like the foreign exchange market. The foreign exchange market is perfectly set up for the consortium of 15 banks to say, okay, we're going to sell our foreign exchange on this big ledger, because that's all really foreign exchange is anyways. And so that might be again, that's just I saw a couple of business plans, they all made sense. It's just an instinct. The second question was yours. I had the same question when he said that. And so we're not let you answer it.
What was the second question again?
Public blockchain without.
How can you?
Yes.
How do you get paid?
Yeah, I think there are lots of examples. So lots of companies run SMTP servers, and they relay mail, even though the mail might not be theirs, and that isn't incentivized by a token. The domain name system, where we type in a name, Google.com or CNN.com or whatever, people run domain name servers, and there's a business interest for them to do that is aligned with other things that they do as a company or organization. And I think the same thing with distributed ledger technology. You can imagine that there's a business interest for market participants to do consensus-based transaction validation, but where they don't have to be paid through an incentive of a new digital asset. And so I think it's quite plausible to imagine that there are incentives for people to do that. They might even be, government mandate incentives that if you want to participate in this, you have to contribute this amount of computing resource to be part of the Fed's new faster payments network or whatever theoretically happened in the future. So I don't think it has to be tied to a token. You can have other incentives that get people to deploy computing resources to validate transactions in a distributed way.
So unfortunately, the clock is telling me I failed in my mission to get a second round of questions in. So instead, just to wrap up, I'm going to apologize for that. I would also to say, each of you, I'd like your prediction for what the breakthrough killer app for blockchain is going to be.
Sorry,
Mike.
It's going to be airplane.
Someone's phoning you up to tell you. No?
That's it. What's the killer app? Well, so on the way up here, I got a call from a governor. Nothing important. He was just asking for money, as they always do. And I told him I was going to go speak at a blockchain conference, and he said, "What's that?" And it tells you just how early we are in this game. And so that's my kind of takeaway.
Because he would have asked you for some Bitcoin if he'd known.
That's true. Do you accept Bitcoin? I do think the killer app is identity. I really do think it's going to be hard to get done, but when it gets done, I think it's going to change the game.
Todd?
Yeah, I would, in the long term, I agree that could be self-sovereign identity, whether it's legal person or natural person. It could be the killer app. It's going to take a long time to get there. I think that blockchains for consumers, honestly, consumers shouldn't have to know what a blockchain is. And I think that it's kind of funny that this becomes so popular. The first implementation is going to be within the institutional space because they have the motivation to deploy it.
And lastly, Jeremy?
Yeah, we're still chipping away at the basic premise that money should work the way the internet works for consumers. And so I think the first killer app, and we're extremely close to this, is seamless, instant global value exchange between consumers across currencies with no fees, with a level of security that doesn't exist. And I think that was the original promise of something like Bitcoin. I think we're going to see that realized with fiat currency, but using this technology, I think we're really, really close to that.